So, have you ever pulled up a financial chart and just felt totally lost, like you're looking at some kind of secret code? Well, you're definitely not alone. And today, we're going to demystify one of the most important tools in trading, the Japanese candlestick. And yeah, I get it. A whole screen filled with these little green and red bars can look pretty intimidating. It's a wall of data, and at first glance, it just feels like chaos. But here's the good news. It's not a secret code at all. It's actually a language, and it's surprisingly easy to learn. So in the next few minutes, we're going to break it all down, piece by piece, and show you how to read the story that these charts are telling. Okay, so first things first, what are we even looking at here? Simply put, candlestick charts are the most popular way traders visualize how the price of, well, anything, a stock, crypto, you name it, is moving over a period of time. Think of it like any other graph. The line across the bottom, that horizontal axis, that's your timeline. It could be broken up into 5-minute chunks or 1-day chunks, whatever you set it to. And the axis going up the side, that's the price. So every single one of those little candles you see tells the entire story of what the price did during that one specific time interval. Now, the real key to understanding the whole chart is to first understand just one single candle. Think of each one as its own little package of information, and every candle's made up of just two main parts. First, you've got the body. That's the thick rectangular part, the part that has all the color. This is really the main event. It tells you the core of the story, where the price started and where it ended during that time frame. And then you have the wicks. Some people call them shadows. They're the thin little lines sticking out of the top and bottom. The wicks show you the full drama of the period, the absolute highest price and the absolute lowest price the asset hit before that candle finished forming. Alright, let's talk about the most obvious thing on the chart, the color. This is your first instant clue about what's going on. Just by glancing at the color, you already know half the story. It's super simple. If a candle is green, that's a bullish candle. It means the price went up overall. The price closed higher than where it started. Buyers were in charge for that period. And if it's red, that's a bearish candle. The price went down overall. It closed lower than where it opened. The sellers won that round. That's it. Green means up, red means down. But here's where these candles get really powerful. Every single candle, no matter its color or its shape, packs in 4 crucial pieces of information. This is what makes them so incredibly useful for traders. And these 4 data points are the open, the high, the low, and the close. You'll often hear it called OHLC. The open is the very first price when the candle's time period began. The high and low are the extremes that the wicks show us, and the close, that's the very last price right before the time period ended. So how do you spot these on the candle itself? Well, for a green candle, it's pretty logical. Since the price went up, it had to open at the bottom of the body and close at the top, right? And the wicks are always the same. The very tip of the top wick is the high, and the bottom of the lower wick is the low. And for a red bearish candle, you probably guessed it, it's the exact opposite. Because the price went down, it opened at the top of the body and closed at the bottom. The wicks, though, still mean the exact same thing. The tip top of the upper wick is always the highest price reached, and the very bottom of the lower wick is always the lowest price. Okay, this next part is really important to grasp. A candle isn't just a static picture. It's the final snapshot of a story, a little battle between buyers and sellers that unfolded over its time period. Let's actually walk through how one gets made. So imagine a new 5-minute candle just begins. Boom, the price opens. It immediately drops a bit, so for a moment our candle has a red body. But then, the buyers jump in. They push the price all the way back up past the opening price. Now that old low point becomes a lower wick, and the body has flipped to green. The price keeps going up, hits its peak for the period, that's our high, then pulls back a little, forming a small upper wick. Finally, the 5 minutes are up, and the price closes. And there you have it. The final shape tells that whole story of the back-and-forth fight. So now that you see how a candle tells a story, let's just wrap up with one special type of candle you'll see, and talk about why this is really the place to start your journey. Every now and then, you'll see a candle that just looks different. It looks kind of like a cross, with a very tiny body or maybe no body at all. That's called a doji, and it happens when the opening price and the closing price are basically the same. This little candle tells a huge story. Total indecision. Neither the buyers nor the sellers could win. It was a draw. Now look, are there other ways to look at price charts? Absolutely. You might hear about line charts or other fancy ones. But here's the bottom line. candlesticks are the industry standard for a reason. The huge majority of traders use them because of how much information they pack into such a simple visual. So if you're new to this, learning this language is absolutely the best place to start. So there you have it. What looked like a complicated secret code just a few minutes ago is now a series of tiny stories. Each candle is a sentence. Each chart is a chapter in the market's book. The only question left is, now that you have the tools, are you ready to start reading?